But I do want to warn investors that, in the investment world, it's not just straight up and to the right.
In this week's CNBC interview, Uncle Robert so surprised to hear this.
Regeneron, Novartis, Takeda. And what we will do and we think of them as cash-like.
Why did Auntie Cathie move to cash? This is so surprising. So Uncle Robert did some research and got some very interesting finding. Hello niece and nephew, this is Uncle Robert. Today we're gonna see why ARK Invest thinks correction is coming. What is ARK doing about it? Is ARK in trouble? Or will they come out stronger? And finally, Uncle Robert's summary and call to action. Uncle Robert spent a lot of effort to make this video for you, so please like and subscribe for more videos like this. Let's start with, who is ARK Invest?
One of the most disruptive and innovative forces in the ETF world today. She's also one of the most successful. Cathie Wood's signature ARK Innovation Fund returned an astounding 148% in 2020.
So what did Auntie Cathie see coming?
It's okay to enjoy being a rock star, even if it's just for a moment, right? You're enjoying potentially life-changing success.
Most certainly, but I have been around the block a few times, the track a few times, and whenever things have gone this well for me, usually there's a correction around the bend, and I want to gird for it and protect it, and also prepare our investors for the possibility and say, just keep some powder dry. So even if we go through a correction, and I expect one, we must almost always expect corrections.
ARK Invest is in a tough spot because they are not allowed to keep cash. We retail trader much more nimble. We can go in and out easily, not like elephant. So Auntie Cathie, can you tell Uncle Robert what would cause this correction?
Over the last really 20 years is that the S&P's PE ratio tends to peak out in the 20 to 25 times range of the forward earnings.
We know that if it's happened before, it must be possible. We know the data shows the market falls 10% once a year, 20% every 4 years, 30% every decade, 40% every 20 years or so.
I do believe if rates were to take a sharp turn up, that we would see a valuation reset, and our portfolios would be prime candidates for that valuation reset, of course. There will be a valuation reset. There will be fear, I'm sure.
So how is ARK Invest preparing? Are you taking profit?
We are likely to be taking profits, as you say. Taking profits is never a bad idea.
But Auntie Cathie, you're not allowed to keep cash. So what you do? What you do?
The FANGs and Microsoft, because we would be treating them essentially as cash-like instruments for our strategy. So what we do is, as a bull market extends, we do move into more cash-like equities. And so what we've been doing for the last 6 months is expanding the number of names in our portfolio. And we do that as a bull market extends, because in some ways it's a tax-efficient strategy. What we will do during a correction, especially a severe correction like the coronavirus crisis presented, we will sell names in which are creating losses now, because again, we've bought them, we've diversified and bought them more recently. Sell those names creating losses to buy our highest conviction names. Some of the names we've been moving into, you'll notice, are names like some of the bigger biotech names, Regeneron, Novartis, Takeda. And what we will do we think of them as cash-like.
So what is your advice to us, retail trader?
But that doesn't mean that investors shouldn't, sometimes take a bit of money off the table and keep some powder dry.
So what about ARK Invest? Are you guys in trouble?
The last year has been instructive. During the coronavirus crisis, we consolidated to our highest conviction names, especially those that were tormented by, I would say, algorithms who were looking for small cash cushions and cash burn. And so we had great opportunities to buy stocks at a fraction of the cost from just a month earlier. And we will use it to our benefit, concentrating our portfolio to our highest conviction names. But I think longer term, especially given the powerful growth trajectories that the 5 innovation platforms around which we revolve all of our research, that those trajectories are so powerful that these multiples, these companies are going to grow into their multiples a lot faster than most investors are now expecting. And so that's a source of confidence for us. Just looking at the portfolios today, this is after the triple-digit gain, as you have said. For the next 5 years, we believe that our returns will compound at an annual rate of something in the low 20% range. And this is in a market where traditional equity returns have been in the 7 to 8% range over time. Because what we're looking at here are long-term, again, exponential growth trajectories that they're not going to be stopped.
So the portfolio may not be able to replicate the 500+% gain it's had in the past 5 years, but it should be, based on what you just told me, well over 100%. It should double plus in the next 5 years.
Yes, we expect more than a doubling in our portfolios over the next 5 years.
Thank you, Auntie Cathie, for interview. In summary, Uncle Robert thinks we need to be on high alert for possible correction. We more nimble. Another example, Warren Buffett had to buy defensive stock in preparation. Uncle Robert also thinks ARK is preparing well for the correction and they will emerge even stronger long term. But niece and nephew, there's always a bull market somewhere. Let's find it together.
There's always a bull market somewhere, and I promise to help you find it.
See what Uncle Robert did during COVID crisis. Disclaimer: this is not investment advice, this is for entertainment purpose only. I hope niece and nephew like this video. Please give me a thumbs up and remember to subscribe for more videos like this. Uncle Robert needs your support. Until next time, bye bye!